Good morning, traders. It's Friday, August 2nd. Don't forget today at noon, we have our live mentoring charting session. Ask all the questions you want. We'll go through the markets, charts, assets, whatever you want to touch on. That is at 12 Eastern time today, noon. Anyways, let's jump into the charts. Yesterday, we saw a pretty big sell-off in the market. We talked about, I shared the charts earlier in the week, how we had these different sell signals. The trend gave a sell short. We had a sell short signal just before yesterday, and how that coupled with FOMO of people piling in at the last minute. This was a huge gap with news. We had all kinds of stuff happening. And yesterday was a never-ending bleed off. Yesterday was actually the perfect day for a day trade, the type of trade that I like, which is a full day bleeding out of the markets crashing and selling off. And then you get a knee-jerk reaction the last half an hour or hour into the closing bell for a short. This is the type of trade I do, like a day trade on SP 500 futures for literally like a 4, 5, 10-minute pop and get in, get out. So it's funny, some of the best trades, my best day trades are always counter trend trades. I don't know why. But anyway, looking at the charts, we ended up seeing lots of selling. We had panic selling of 6 yesterday by the closing bell. That is a sign that there's a lot of fear in this market. When we look at the SP 500 futures chart, same for the SPY, but we have a move down. It's got this kind of bear flag formation. It looks like it's breaking down. You can see futures breaking down today. Stocks are down anywhere from 1% to almost 2%, depending on the index, picking up speed as we speak. Right now, it's 840. So we're just starting to see economic data hit and for the market to drop. Overall, we could still see a pretty big pullback in the equities market. If we do Fibonacci extension, we can go from the high to this low to this high. We could still see a pretty good drop from where we are. From yesterday's close, that would be about almost a 3% drop to the downside from yesterday's close. So still a pretty good, decent haircut for the market to come down. And just looking at that level, if we draw a line across here, you can see it's a previous high, consolidation, and then the breakout and move. So there's quite a bit of downside. The NASDAQ in free fall again today, over 2.2%. So picking up speed. Again, it can really wipe out. This is why we don't want to be in hold stocks when the market is falling. I mean, everything pretty much goes down. We do have gold shooting up today, up 1.5%, new all-time highs. Silver is up 2.5%, not at new all-time highs, but moving up. Again, I try to always state this, that gold is like the low-risk global play. There's a reason why it's hitting new all-time highs. Yes, it's slow and boring. A lot of people don't want gold because it doesn't have the percentage swings, but it's very accurate. It's very powerful. It's not about making a lot of money or big returns. It's about being consistent, and gold kind of does that. And it is moving up to new all-time highs while the stock market is moving lower. And when there's panic, like we saw yesterday, we see usually silver will be under more pressure because it's more trader-based, aggressive, emotional traders. So it will get pulled down with panic. And same with gold miners. GDX, it's actually recovering pretty nice, but it's not breaking to new all-time highs. It does have a very nice chart pattern, don't get me wrong, but it's not like gold hitting new all-time highs, low volatility, fairly high probability of winning trades with gold versus the volatility of silver and miners. When we look at the VIX, it's up 10% already this morning, another huge pop. So there's blood in the streets. People are starting to really panic. And that's when almost everything can pull back. But we are definitely seeing gold, silver bucking that trend today as a defensive play. Now, one of the members said they still hold XLU, and it just hit one of the targets that we had. Now, XLU has been doing very, very well. It is rocketing higher. It's going the exact opposite as the SP 500. Let's just pull up the SPY. If we take a look at the SP 500 and just look at the recent price action, let me get rid of the volume here. Try and get this to even out. So this is one thing I've mentioned many times before, is when we see utilities skyrocket up and we see the stock market go down, which is even lower today, when we have this type of divergence, It has signaled most times in the past, the stock market is about to fall off a cliff and have a pretty big sell-off. When we take a look at the difference here, we can say, okay, well, we've seen a 6% rally in utilities, which is a big move for utilities. And we've seen the stock market, the SP 500 fall 3.7. Now it's trading even lower. It's down about 4 or 5% as of this morning. Doesn't want to stick down there, but that is some pretty big divergence. And the bear flag I just showed you guys on the NASDAQ and the SP 500 is pointing to a further collapse. So that shows the power of this looking like it's playing out. There's a lot of momentum to the downside for the stock market. Let's see if I can get rid of some of these charts, get back to normal here. There we go. Let's take a look over at bonds. Bonds are rocketing higher this morning. We're seeing 1.88% rally in bonds, a huge explosive move. Obviously, we have all kinds of data, economic data, earnings and stuff playing into this, and we're starting to see bonds come to life. Big pop today. When we look at the big picture, it is still in a downtrend, but we've been talking about this, feels like a bottoming formation. And I know from everybody's emails and comments and all that stuff, everybody's like, bonds are bottoming. I want to get into bonds, or they're already in bonds. Again, I see this as a bottoming formation. It's not about getting in at the bottom down here and catching all this move. To me, it's more so there's a couple of different levels. There's a level across here, which we could say this is the bottom. We could go with a bigger bottom, which will be this whole level here. It's not about trying to get in at the bottom. It's about identifying when it has bottomed, when there's a good chance that it's starting a new multi-year rally, and then we can start playing it to the upside. I know the mindset of everybody. There'll be a big pop in bonds, and everybody, or not everybody, but people will say, why aren't we in bonds? I know the rates are going down, all this stuff, but that's hindsight 2020. And the market hasn't fully reversed. We're very close to bonds starting to give us trade signals. We're very, very close with our strategy. With our CGS strategy, but we're just not there yet. But people have that tendency to feel like if there's a big move, we should have caught it, or we should have already been in position for it. That's not the reality of trading. That's just pure false kind of beliefs. It's not the way it really, really works if you're going to manage risk and follow trends and things like that. Taking a look at the dollar. Dollar is plummeting. I have no idea what the economic data is this morning. I don't really care. The markets are going to do whatever they're going to do. It doesn't matter if you follow the data, you don't know how it's going to react. But obviously there's a big shakeup today. Our strategy has been identifying this through all the money flows, which is why we've moved to cash, why the strategy has said move out. There's no clear direction. Chaos is kicking in, and we're seeing that over the last couple of days. Massive rally in stocks. Yesterday was a huge sell-off. And then today, all that is carrying over with big pops and drops across all asset classes. The Russell 2000 taking a look, huge haircut yesterday, massive reversal. It went from breaking out to the squeeze higher to now getting slammed yesterday with huge volume. It is still holding in its uptrend. It's at the 20-day. It's oversold on our 30-minute chart, so we could see a bounce. Today, there's a lot of fear. Yesterday was a lot of fear, so we could have an oversold bounce. Today, once the market, it's going to gap much lower, and gaps tend to get filled. So we probably need to see the market rally up and fill that gap. But there's gaps everywhere on this chart, on a bunch of different charts. And like the SP 500 that still need to get filled from higher pricing. So there's a lot of noise and mixed signals in this market. If we take a look at crude oil, down 2%, it bounced off we had this rising wedge level across here. Going across, it kind of bounced off that 2 days ago, and then it's fizzled back down, hitting this level, and we'll see how that unfolds. Overall is trading down. It's right back at this level, and we'll see if it starts to break down. In terms of Bitcoin, somebody wants to see Bitcoin. It's up 1.5%. Again, it's still in this giant bull flag. The question is this a bull flag pattern? Pointing to dramatically higher pricing, or is this a kind of a topping phase and it's going to eventually break down and reset? Who knows? Nobody knows. The grand scheme of things, this still looks like this could be a cup and handle. We got the handle right through these highs. We got the cup and the handle. If this breaks out, you could say it's a cup and handle, which is very bullish. Could be a big bull flag, which is just as bullish almost. So we'll have to see how that goes. But right now we are definitely seeing, it's just in a consolidation, pausing, digesting this move, trying to figure out what it is going to do. Let's go take a look at the hot list. Small cap stocks and regional banks, they got chopped yesterday, down big on heavy volume. But when we look at go to a different asset class, we saw actually real estate continue to hold up and move higher yesterday, even though stocks crashed. So when people get nervous with one asset class, they kind of move to another. Now, IYR is still a bunch of companies, stocks that own real estate, but it does feel like it's a different. It's just like kind of like gold. The real estate, the REITs are a little bit different than the stock market, meaning they can buck the trend for a little bit because people are like, oh, I'm getting out of tech and stocks. I'm going to move into some real estate stocks, more of a physical asset. And that's why I think we're seeing this move up a little bit, kind of like gold. But it's just short-lived. Eventually, this will crash with the stock market. IYR shares, I think, fell 50 or 60 or more during the 2008 financial crisis, so they will crash. But short-term, little bias, we will see it. It can buck the trend here and there as a different asset class. Overall, I think that's about it for now. We'll see how things unfold and go from there. Take care. Bye-bye.